Hello again, traders. Doing trade once again from DRFX, Swing Trading Mentoring. Going to be taking a quick look at the situation now on the Aussie Swiss franc, which has actually provided us with a bearish signal as I had predicted within the consolidation setup that has been formed on the 4-hour chart. So I'm going to be taking a look at this bearish signal that has been formed on this time frame and look at the possibility of a continued movement down towards support, as well as the possibility that the market could actually rally and reverse without actually hitting the support boundary. Now here you can see the setup on the 4-hour chart where the market completed the formation of a pennant consolidation on this time frame following a period of sideways movement over the last several days. Now this has led to the formation of this pennant where the market has formed a horizontal boundary corresponding with a support boundary that is formed at an angle, as well as a small pennant of a similar dimension, which has been formed just below this major resistance boundary. Now, these two pennant setups are basically examples of this type of pennant here, where the market will form a horizontal boundary and a support boundary that is formed at an angle. So this actually represents one of the three main types of pennants and one of the four main types of consolidation setups that we would generally see on the daily chart and the 4-hour chart. So this was the projection that the market would make its way down to the support boundary once again of the larger pennant, and that this would actually start with a breakout from this smaller pennant, which would also break below this uptrend line. So these would be two confirmation signals that we would need to indicate the start of the movement down towards this area here. So that breakout is actually taking basically representing an example of consolidation breakouts, which you will see described in my trading manual, where basically I show you the three main ways in which the market can start consolidation breakouts. The first one is where the market will provide us with a strong signal that breaks the support boundary or even the resistance boundary. Or you can have two ways in which the market can actually, in this second instance, reach the boundary and then pull back inside of the consolidation and then U-turn to provide us with a breakout signal. Or it can break out initially, pull back to test the broken boundary before providing us with a breakout signal. So these are the three ways in which the market could actually start a breakout from consolidation. And as you can see here, the breakout took place as predicted below support and below this trend line. And as you can also see, this also took place following an initial breakout bullish, which failed, leading to the formation of a double top formation, which started the reversal and the breakout bearish. So the market providing us with these breakout signals as predicted, breaking below the support boundary as well as below this uptrend line. So for all intents and purposes, we should expect the market to eventually hit the support target and provide us with a possible trading gain. Now, those double tops that we see here that were formed as the market reversed and broke up below this area here are one of the examples that we see of how the market can provide us with false consolidation breakup reversals. Now again, from the trading manual with regards to the theory of false consolidation breakup reversals, basically the structure of these setups is that the market will attempt a breakout at one end of the consolidation and then reverse sharply to take out that breakout attempt to take us back inside of the consolidation. Now in some cases, after the market returns inside of the consolidation, you will see it move within the boundaries of resistance and support for a little while. But in most cases, once the reversal is sharp and aggressive, in most cases, this reversal will immediately lead to a breakout at the other boundary. So in most cases, you will see the market reverse and then head back inside of the consolidation and start the breakout at the other end of the boundary. Now, this is one of the ways in which the market can start these reversals with a single candlestick signal, bullish engulfing candlestick formation in the case of a bullish reversal, as well as a bearish engulfing candlestick formation in the case of a reversal that takes place at resistance. Now, there are actually three other ways in which the market can start these reversals. You can actually find them reversing with double tops or double bottoms, bullish or bearish ABC signals, as well as small consolidation setups that are broken and that would provide us with a breakout signal that takes us back inside of the larger consolidation. So these are the four main ways in which the market can start these types of reversals. And the one that actually took place on the 4-hour chart here was that of a double top formation. So the double top formation providing us with a false consolidation breakout reversal signal, leading to the breakout, which should take us down towards the support boundary. Now there's still an element of risk that is associated with this candle, which we also have to take into consideration. So even though the market has provided us with this strong candle and we're basically just above the support target with just a few pips left to hit the target, what I've found over the years is that these types of candles, when they are this large, can provide us with an element of risk. Now, the risk that is associated with this candle is that, one, it can either take a very long time to hit the target. So in most cases, if the candle is a little bit of a normal size, meaning it is smaller than this, it would usually take around 24 hours or 36 hours to eventually hit its target. But when the candles are large like this, they can take as many as 2 to 3 days to eventually hit their target. So that is one element of the risk that is associated with these large candles. Another element of risk associated with them is the fact that they can actually indicate that the market has actually reached the end of the trend direction. So this could actually mean that the market may not actually hit the support boundary and that it could actually rally and take us back to resistance. Similar to what it did here, where the market pulled back and then U-turn to hit resistance without actually hitting the support boundary. So those are the two elements of risk that I see that are associated with these types of breakout candles that are this large. So what can happen here, as you can see in this graph, is that the market could U-turn without hitting the boundary, without hitting this support boundary. Once it hits resistance, then it would essentially create a support boundary here. And what we would have to do is to adjust the support line higher to meet this support point and consider this as a support boundary, as a new support boundary for the overall Pennant setup. So that is what is possible on the 4-hour chart if that takes place. And on the daily chart, you can see here the setup as well, where this would be the boundary, moving from this area here, this boundary, to what could possibly be a higher support boundary. So that is what I'm seeing in terms of the situation on the Aussie Swiss franc. Market has formed a pennant consolidation, as you can see on the 4-hour chart and the daily chart, and has provided us with a breakout signal as projected. But because of the strength or the size, the extraordinary size of the breakout candle, there are two elements of risk that could actually lead the market to actually reverse sharply bullish without actually hitting the support boundary. So it is possible that the market could eventually hit the support boundary, but because of those elements of risk that I've seen over the years when it comes to these types of signals, I would actually opt to avoid trading this because of the possibility of a reversal in this situation. So that's it in terms of the Aussie Swiss franc. Going to be monitoring it nevertheless to see what actually takes place. Of course, if you have any questions, you can let me know by emailing me at shepherdduane@gmail.com. You can also check out my website, swingtradingmentoring.com, and my Instagram page, DRFX Trading, where you can find a full description of the trading methodology that I now use, including description of the trading manual, the trading signals that I provide, as well as the daily video lessons. All of this, of course, as part of the swing trading mentoring service that I provide over a 3-month period, as well as over a 6-month period for my VIP clients. So until next time, traders, happy trading and all the best.